Hello, Jim here. I had a great start to May. I made over 2,000 in literally 2 days. Most of the trades were covered calls. I believe I made pretty close to 1,600 in just my covered calls trades. Today, I'm going to share with you those trades. I'm also going to talk about why I really like covered calls, especially during corrections or bear markets. And at the end of the video, I'll go over the particular trades and show you my favorite setup for selling a covered call. So stay tuned. I think it's going to be well worth your while. Okay, now before I jump into the specifics for this video, I do want to give a quick market update. It's May 8th. The markets are up big time today. Trump made an announcement about a deal with the UK related to tariffs. I think there may be a lot of deals coming fairly quickly. I believe personally that once one deal is put together and it's actually inked, a lot of other countries will come in and also make deals. So hopefully we'll be done with tariffs over the next couple of months. At least that's my hope. Now, does that mean we're going to be on a upwards trajectory? I still think we're going to have a couple of rough weeks or days. I wouldn't be surprised if, like this week, we're down a day or two and up a day or two. And I believe that's what's happened so far this second week of May. And the only reason we might hit new lows, at least what I believe, if we hit new lows, something else will have to happen that will take us to new lows. I believe the tariffs are kind of, they're already in the market, or they're already reflected in the market. I don't think the tariffs are going to cause us to go and hit new lows compared to what we hit in early April. Now, I could be completely wrong. I do believe we're going to continue to have a lot of choppiness in the markets. But I think we may have already seen the bottom, and I wouldn't be surprised if we're in a full-blown bull market by the end of the year or towards the end of the year. Again, my 2 cents, and it's probably only worth 2 cents. So how did I make so much on the first 2 days of May, especially selling covered calls? Part of it is what we're going through right now with this choppiness, this high volatility. There's really good premiums out there. There's really good covered call premiums, and also, cash secured put premium. So, and I think because of this craziness we're going through, that's probably going to continue. I was able to, and I'll share the trades at the very end. I believe I made 6 trades. 2 were ETFs and 4 were on different companies, and brought in, like you can see here in the title, 1558 just in the covered calls. I believe I brought in another 500 on I think I rolled a covered, not a covered call, I rolled a cash secured put, and I believe I also did a new vertical put credit spread. So it's just been, because of this volatility, just the premium has been better than usual. So, options traders can do really well during this time period. Now, it all comes back to picking the right companies. So I'd always like to reemphasize, using good fundamentals, looking at return on equity, return on capital, also debt to equity. Are they growing? Are they growing earnings as well as revenue? Are they paying a dividend? If they're paying a dividend, are they growing that dividend? Do they have a relatively low payout so they're not, paying all their income out or their earnings out in dividends? I like to see lower payout ratios, but I like to see the companies being able to grow those dividends even with low payout ratios. So just a few things that I like to look at. I share this information with my membership. We actually had a Trader Club meeting on Sunday where we talked a lot about this and how I use Seeking Alpha and Barchart. I use Barchart more for technicals. I use Seeking Alpha more for fundamentals, and it works out really well. I'm able to identify really good companies. Now, is it always an uphill, or are these stocks always going uphill? Well, definitely not. On occasion, you can't predict what management's going to do. One example is Block or Square. It got hammered this past week. Their earnings were not very good, to say the least. They also changed their ticker symbol, which I don't understand. They changed from SQ to XYZ, which I don't know, it seems crazy to me. So, looking at all the fundamentals and the details and the technicals for them, everything looked good. So you can only do the best you can do. And sometimes these, especially companies or stocks, will go against you. And you really, it just kind of comes with the territory. What I am doing now going forward compared to what I did in the past, I am at the end of the year or sooner. Like I got rid of some stocks last month that I felt I didn't need to be in. They weren't really going to perform long term. So that's also part of the game is not investing in companies or ETFs that you don't feel like will do well long term. Not really feel, but where you think they potentially won't do well long term. So what I really like about covered calls, and I think everybody should be trading them, is they're fairly simple and easy to understand. If you have 100 shares of stock, someone will pay you money for the opportunity to buy those shares from you. And during these times, they'll pay quite a bit. It's actually quite surprising. And then to set up an option or covered call option, it's fairly simple. It's also fairly easy to roll and deal with or manage down the road. So it's one of my favorite strategies, the covered call. I've been trading it longer than any other strategy, going back almost 15 years, and it's worked out really well for many years. I never had an assignment. And I really didn't know what I was doing. I would just sell a covered call. I would pick a price. I'd say, well, I'm okay with losing these shares at this price. And then I would sell a covered call at that price. And that worked out really well for many years. Now I put a lot more details into it. I look at delta, I look at theta, I look at where I think the stock's going to go. Is it a momentum player or is it a slow growth company like a Coca-Cola? You handle those differently. You don't want to be using the same strategy for a Coca-Cola as you would, say, a Palantir or a NVIDIA or even an AMD. So just something else to think about. I'm going to share a little bit more about that in my guidelines. When I go over the trades, I use what I call my planning worksheet. I'll also share with you what the guidelines look like. And I'm also setting up a checklist. In one of my previous videos, I did a checklist for the cash secured put. I'm in the process of creating one now for covered calls. I'm going to share that with my community. Once I share it with my community, I get some feedback and we kind of go back and forth and we create a better checklist. So that's something else that I'll be providing to subscribers. So it's not quite ready for prime time, but soon it will be. So I didn't really need to go into a ton of detail in this video, but I'll also at the very end, I'm going to do a trade setup, how I approach, like I'm looking at running a covered call on PayPal. So I'll share with you how I'm looking at setting that up and some things that may be a little bit different than how you might typically do it. I have a little bit of a different strategy than I'm taking right now after we've gone through this correction and that we may be in a bull market before too long. I am definitely changing the strategy that I use with my covered calls. I'm almost calling it a covered call spread. So I'm also buying the long call so I don't miss out on upwards, or potential of the stock going way up. To give you, for instance, I've owned NVIDIA since 2018. My cost basis is like $15 or $20. I sold covered calls very safely with that, but at one point I came really close to losing those shares. Now with AMD, I own 200 shares, and it's potentially going to take off too. At least that's my humble opinion. So I'm selling covered call spread. So I own the 200 shares. I'm selling a covered call, but then I'm also buying a long call. So if AMD later this year just shoots through the roof, it goes up to, I'm projecting by the end of the year it'll be 125, but I could be forecasting too low. It may go to 150, 175. And by having a covered call spread, all I would miss out on would be the spread itself. Plus, mainly because that spread would keep gaining value. Plus, if the shares were called away from me, that I would be able to call them back by owning that long call. So I'll talk a little bit more about that in the trade setup. So stay tuned for the next part. I think it's going to be, again, well worth your while. Okay, this is my May planning worksheet. What I did is I just removed all the other trades that I wanted to focus on these first 2 days. And you can see I had 3 trades on May 1st and 3 trades on May 2nd. So one of the first covered calls I did was on STX. This is Seagate, another company that I really like and has some impressive numbers. And I set up a covered call expiring originally on 5/16. I rolled it out to 9/19. So this was a covered call roll, and I made $396 on it, which I did go out a little farther. I went out to 9/19, and that was to get the strike price way up. So originally it was at 85, and I rolled it up to 90. I believe STX has continued to go up. I believe it's like 92 or 93. So I'm trying to keep it above or fairly close to its current price. And it's already fairly profitable. I believe I've got a 10 or 12% profit on it already. So the second trade, May 1st, was let's go over to the left. It was Intel. Now this is a little bit unique. Intel has just been hammered. I own 400 shares, so I've set up an in the money covered call strategy, and I'm just rolling every week. It's at 1950, and I'm keeping it at 1950, and it seems to have been staying in that area. And I'm making, let's see, so 1950, I went out a week, so it was expiring on 5/2. I went out another week. I'm looking to roll this again probably today or tomorrow. I've actually got an order out. It hasn't been filled yet. And then I made $102. So I've been able to make around $100. And this is like a 28% return. And I'm okay with those shares getting called away. But if new headlines come out or some new information comes out about Intel and I potentially change my mind where I want to keep Intel, then I'll probably will roll farther out and go much higher to try to keep the shares. But right now it just seems like I don't know, they're just struggling so bad, and it may be another year before they kind of are able to get out of the hole that they're in. So next is Cisco. I like to compare a lot of times, what Cisco looked like back in 99, 2000. It's almost like what NVIDIA looks like now. But NVIDIA currently has like a 25 PE, or maybe even a little lower than a 25 PE. But Cisco was a gigantic company. It was like the biggest company out there in 99, 2000. But then things changed, and it at the time it was, I think, the worth the most of any company out there. It was kind of like Intel and Cisco. Um, and Cisco has kind of coming back recently. I've been able to earn some pretty good income with these covered calls. So I actually originally did a covered call at 65. These are in my brokerage. And I rolled out to 919 again, kept it at 65, and I made $320. So a good amount. And I believe Cisco is right around 58 right now. Sometimes, especially with it being a little bit farther out, almost 3 months, if Cisco drops down, I may drop down a bit with the strike. Like if I move from 65 to 60 with that strike, I could probably pick up even more premium. And I do that a lot with NVIDIA. Sometimes I just keep it at the same date and I move it up and down to make more premium. And this was like a 9 or a 6% yearly return, which they pay like a 3% dividend. And Cisco meets all my criteria. It's a great profitability, little debt. The growth is kind of slow, but it does have some growth. With earning 6%, I more than double the dividend. So just with covered call income, I'm able to make almost 9%, a little bit more than 9%, which, and that's what keeping the shares. That doesn't include any of the appreciation. I believe these shares, when I first bought them, were like in the 40s. So it's come up quite a bit. So let's run to the next one. This is IJH. This is one of the two covered calls on some of the ETFs that I own. IJH, I think it's like the S&P 600 or I believe it's the 600 biggest companies. So instead of the S&P 500, I think it's got the 600 companies, and it's mid cap, and it's not too pricey, and that's why I like to trade. And I've owned them for a long time, and I've done pretty well with them. So I rolled it on 5.2. I rolled it, I believe, kept the same strike, originally expiring 5.16. I did go a little farther out. It doesn't have as good a premium as some of the others, but I tend to roll it every 6 months, and I try to double the dividend. I believe it pays like 1.5 to almost 1 3/4 in a dividend. But I made 233, and which is like an 11% yearly ROI, which again works out pretty well. Compared to a lot of the other ETFs, you can't make quite as much with it, but it does grow fairly well. Not as good as the S&P 500, but it does a little bit better than the Dow. And like I said, I've owned it for quite a few years. Next is XLK. These were assigned to me last month. I trade or I like to own XLK versus the NASDAQ. I kind of look at it like the QQQ, but a lot less expensive. They have a lot of the same stocks, and it has very good premium and lots of expirations. Not quite as many as QQQ, but it has good open interest and fairly good volume. So this is the first one I did. Originally, it was in the money. No, actually, this was a roll. So this is the second trade I've made on the covered call with XLK. And when they were assigned to me, it was a little bit of a loss, but now I believe it's a little higher than 216. It might be 218 now, but I rolled it out to 919 and I brought it up to 215 and made $323. So if it continues to go up and goes into the low 220s, then I'll roll it again at some point. It 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 has good growth. Again, if you compare it, if you go into any of the charting type tools like Seeking Alpha or Barchart or any of the other charting, and you compare it to QQQ, it has very similar performance. So, and that's what I wanted. I instead of trading in QQQ, this is what I wanted to trade in. And this is like a 4% yearly return, more than doubling the dividend. And then FCX, this is one of my wheel trades. And the FCX, which is a miner, I believe they mine special minerals in the US and South America. I think they're going to get some good business with onshoring and with, needing to have these minerals mined here where, we're not importing them from overseas, especially if they're used in medications and stuff. But they were assigned to me again. It's one of my wheel trades, and I I believe they were assigned to me at 42, but I had sold cash secured puts on them for quite a while. I believe almost 6 months. So I sold a covered call right at 41, and currently they're 37.60. So the delta was 0.2465. So pretty near a 20 delta. With some of these stocks, it's never, I tell people to sell covered calls around a 20 delta. And the more momentum the stock has, go with the lowest 20 delta that you could go with, or even go with closer to a 10 delta, just so you don't lose the shares and you gain that appreciation. So, and this was an opening trade, so it wasn't a roll. I made 172.64, which is like a 17% return. So on those trades total, I made 1558, and the required capital was like 88,000. So it worked out really well with doing covered calls. I also did a vertical put credit spread, and like I said before, I rolled a cash secured put. So I made nearly 2,000 just in the first 2 days of May. I'm currently just shy of 4,000, and it's May 8th, so May's turning into one of my best months. which is interesting because it followed one of my worst, but I did remaneuver in April, meaning I'm owning a lot more stocks that I really want to own, and I'm getting rid of some stocks that just haven't done well, and I'm going to continue to do that. I do pride myself on owning companies a long time, but it's not going to be forever. Like I've owned Procter and Gamble and Coca-Cola and Southern Company and Con Edison. I've owned those for many, many years. So some I'll keep probably forever, like XLK I'll probably keep and continue to sell covered calls on. Some of these others I'll probably keep forever. STX, I really like Seagate. Um, and I also really like Cisco. Intel I might not keep. And FCX, again, I'm going to keep running the wheel. I'm doing this monthly, so either they'll get assigned away from me, and if they don't, I'll just sell another covered call once this position expires on 620. If they get assigned away from me, then I'll do another cash secured put right around 41 or 42. So it's worked out really well. So next, before I jump into sharing with you what it looks like in a trade setup, let me just show you. This is what I share with my community. I've got favorites. I share what stocks I really like, and I color code it. Here you can see I kind of marked XYZ in red because of what's gone on with it recently. I'm also try to do what I call my trade rankings. I try to identify, my problem stocks like XYZ will probably be added to this list and why it went against me. And, um, you know, I also identified my ETF trading has been unbelievably good. Rarely have I had anything get assigned to me. XLK was the last thing assigned to me recently, but it's now profitable. And even ARC was assigned to me a number of years ago, and it's also now becoming profitable again. Then I also have a checklist that I go through and I update these, and I also have guidelines, so my guidelines for selling covered calls and puts. I'm doing more formal checklists that is in addition to this. I think in 2 videos ago, I had my cash secured put checklist. And I also share my goals, how I'm doing each month. So here you can see 23, 24 in April, um, that's just that 83,369, I believe it was. Doesn't include all the assignments. I probably took a loss, definitely took a loss for April. And that's what you're going to have. But if you weren't trading options, you'd end up doing a lot worse. Meaning bringing in that steady income day in, day out, month in, month out, and then when you have a correction or a bear market, you end up doing a lot better. And that's what I found. I'm actually up or was up during the correction in my regular brokerage because I have so much Coca-Cola, Procter and Gamble, a lot of the companies that do well during especially we had more of a NASDAQ correction or S&P 500 correction, and these big Dow companies typically do real well. So let me next jump into what the trade setup would look like. So stay tuned. Let's jump into that next. Okay, now I'm looking at PayPal. I think I own 300 shares of PayPal. I really also like PayPal. Now, again, they produce or bring in tons of income. They also have good profitability. Again, they have debt, but they have plenty of cash to cover the debt. They're not a big grower, but they are a steady company that does well. But what I really like about them is they have a buyback program. They're buying back more shares than almost any other company, to the extent that over the next 2 or 3 years, they may end up buying back, a fourth to a third of their total number of shares. So, and companies who do that, you typically get better returns. So here I am with PayPal. This is the Schwab trader page. I like using this because it's just easier to deal with at times, especially for doing videos. I also do Thinkorswim, but I just find it a little bit easier to kind of get my point across when I use this. So, you select your symbol. The strategy is a call. So I'm calling, um, giving someone the opportunity to call the shares away from me. So it's a contract I'm going to sell to open it. I have 100 shares that are available to trade on. The expiration right now. I like to do monthlies. So the next big month, and there is monthly expiration next week, 5/16, and I could look at that, so I could say, well, I'm willing to sell covered calls just for a week. Um, and then I need to determine what call price. What I tell people, especially if the stock was assigned to you or if it wasn't assigned to you, figure out the cost basis. Your broker can typically on the position page will show you what that is. So take a look at whatever your cost basis. Be sure you're at least doing covered calls above your cost basis. That's why it's kind of difficult with what I'm doing with Intel. Intel, I believe my cost basis is like 42 and it's currently trading right around 2021. My cost basis for PayPal right now, I believe, is 74. So I'd like to do 77.50, but let's look at the delta. That's like a really low delta. So I would want to go a little bit higher than that, which I have to lower the price. So the delta this time is 9. So again, not bringing in much premium. We could try 70. So 11, no, that's pretty high delta. So that went too high. So if we go to 72.50, that's a 22 delta. So I could do a 72.50, but that's below my cost basis. So I really don't want to do that. I could try different weeks. So I could go out another week and then I could go, I want to really trade at my cost basis. So I'm again at 75, that's my cost basis. The delta's 15. So if you look here, it's a 15 delta. I could bring in around $30. I like to bring in around 100 per contract. So $30 isn't good enough for me. I could look to go a little lower, brings it up to 71, and it's a high 20 delta. But again, it's still below my cost basis. So I need to go out a little bit farther. So I'll go 530. This is a 32 delta. You can see it here. I'm going to increase that again to my cost basis. So 75. So now I'm in a 19 delta for 40, between 46 and $50. So someone has bid, they want to pay less. So they're bidding on a setting up a call contract. They want to buy the call, but they want to buy it at 46. Someone else has said, well, the least the lowest amount I would take is 50 cents per contract or $50 because again, it represents 100 shares. So, and then I'm at a $19, 19p or delta. So it's not worth to me, I need more premium. Again, I like it closer to 100. So if we got another week, we're getting there 72 to 80 cents. So a 23 delta. So this could work, but again, not enough premium. So I'll go out another week. I'm at a high 28 delta and now between a 94 and 109. So, but what I found is the monthlies, and the monthlies are always the third Friday of every month. So the third Friday of June is 620. And now I'm between 119 and 122. My cost basis is 75, and I've got a 29 delta. Now, if I went higher, could I go to a 76? Now it'd be 77.50. So it dropped, and again, I'm between 61 and 67. So I could potentially do the put here, or not the put, the call here, make what I want to make. So let's close this. So a lot of times what I would do then is click on this 120, and I typically would go slightly below it, usually $2. So I'd be looking, instead of doing the full ask, which at times can be difficult to get, I would go with 118 and I would see if I could pick that up. Then I would say review order. But let's play around a little bit more before I jump into doing that. Now, say this was another company that could grow really quick. One thing I might want to do is protect myself from the upside. So, and why would I do that? Just in case the stock shot through the roof. I believe PayPal is oversold at this point. So could it go up to 85, 90? It was there not too long ago. So it could go up to 85 or 90. So what I can do here is I can say, well, I want to buy a long call, so I would look at 85. And then and it's cheap. So this is what I tell people to do. If you can buy a long call, then you should, especially if it's inexpensive. So in this case, I've got this backwards. So I need to do buy to open. So it's between 103 and 111, but I was looking at 117 and 123. So you might say, well, why would you do that? You're giving up $12 to $14 for this one contract. But what would happen is if PayPal went above where it is currently, so say it over the next month, it went up to 75, this 85 will also gain value. So it would be almost like looking at 80 at this point. So it'd probably go up to 32 to 37 cents. So even though I spent 12, you know, in June or 620, I could end up making more money on it and selling it, or it makes rolling cheaper. Or if, say it goes up to 95, so it goes up $20 more than what it is, it'd be almost, you know, it would almost be like a $6 or $7 is what this would be worth. So you could sell the call, and hopefully this is understandable. It would be 85, but at the time it would just be worth quite a bit more because the stock would have gone up, and you could potentially sell this long call for a lot more, or you could allow the shares to be called away from you, but then they'd be called back to you at 85. So what it allows you to do is, if you really believe a stock has a lot of momentum, it can shoot through the roof. You're just protecting your upside. So a lot of times with selling covered calls, if you sell them too low and you end up deep in the money, you end up kind of clipping your wings. You're not making as much. You're not, you're potentially limiting how much you can make or what your appreciation would be on that stock. So by doing this, it gives you the opportunity to, if the stock shoots through the roof, you continue to earn that appreciation. All you really miss out on is potentially the spread. Now you may also want to see, well, at 82.50, does that make sense? That almost makes sense too. So you're taking a smaller spread. Or you could potentially go to 80, but at some point it's going to be too pricey. Now even that's not too bad between 80 and 90. And that's only a $5 spread. So again, you're protecting yourself. So this is one thing, especially after a bear market or a correction and the stock shoots up, this is something you can do. And I always tell people to take a look, see if it's worth doing. If I didn't explain this well, add a comment in the comment section down below, and I'll try to address it. I'll try to do a little bit of a better explanation. But this is what I'm doing now. I actually did a trade just like this with AMD today because I think AMD may shoot through the roof at the end of the year. At least that's my 2 cents. I'm using that old comment there, but it may only be worth 2 cents. But I do think there's potential that a lot of these stocks will shoot through the roof. A lot of times, I think we're back 50% above our low point in April, but I wouldn't be surprised if once these trade deals do get inked, that we hit new highs later this year. Maybe it's third quarter, maybe fourth quarter. And some of these stocks could shoot through the roof, especially if they've been beaten down. A lot of the NASDAQ was really beaten down. A lot of the companies were oversold, and they could rebound tremendously. So that's what I wanted to share with you guys. Let me know what you think. Do you end up selling covered calls? At least half my trades are covered calls. I like to stick with safe and easy type trades. I'll probably continue to do more of these types of trades going forward, going into the future. And I share these with my membership. I go into a little more detail, both in Discord as well as in Patreon. So take a look at my membership. It may also be something that you're interested in. I am going to be increasing prices probably the beginning of June. I may even do away with the trial membership that I do have on the Investor Club. I'm finding a lot of people I have so much value, and there's so much in the collections and so much that can help people with being better traders. At first I didn't have a lot out there because I was a new YouTuber, and I didn't have the membership very long, and I didn't have much in there, but now there's a lot in there. So um, I encourage you to take a look now before I increase prices and get away with the free trial. So as always, thank you for taking the time to watch, and look forward to seeing you next time.